Started. So good morning, everyone. I'm Susan Williams. I'm the president of the Venango Area Chamber of Commerce. I do have Tessa, my executive assistant, on with me today. So we will be co-hosting. And I'll just remind you that we will be recording today's session. So I'm going to go ahead, let's see, and Tessa, I want to record as well. Oh, you've got it recording, so we're good to go. All right, well, good morning and welcome everyone. This is the second in our Shift, Sustain, and Succeed series. We welcome everyone to join us on Tuesdays and Thursdays. These are free and open to everyone, and we'll do our best to answer your most pressing questions that our businesses have about navigating the COVID-19 situation. So on Tuesday, we talked about the EIDL and PPP loans. We dug a little deeper for those who are trying to figure out if there's still time to apply and what's going on with those. And today, we're going to follow up with our guests, Richar and Angela Shields of Richar Shields and Company. And I'll remind everyone that as the rules keep changing, we're going to answer the questions as best we can today, given the information we know, and that's changing rapidly. So we know that sometimes things are different for your different situation. You need to be checking with your advisors, but I thank both Ann and Angela for being willing to join us and go out there and tell us what they've learned about how we deal with these different funding options today. So if you have any additional questions we don't get to, I'll remind you that you can add them to the Zoom chat. We'll do our best to include them, or to follow up either via email or call or on a following session. So with that, Ann and Angela, if you don't mind, we'll go ahead and get started. I'm going to pose the questions, and they're going to kind of take turns as they feel best prepared to answer what we're looking at today. So speaking of the payroll protection loans, a lot of people have been notified that they've been approved for a payroll protection loan. Can you talk about what they can go ahead and begin thinking about spending their loan proceeds on?
Yeah, so I'll take this one. When you filled out your PPP application, you used certain numbers, payroll numbers that you were provided either by us professionals, your payroll professionals. You can use the PPP money on 75% payroll, 25% rent, utilities, mortgage interest. Angie's going to talk about that later on. The 75% payroll is going to include your wages, group health insurance, and SUTA, your state unemployment.
Great. Is there anything that I should be aware that I might be tempted to include that I should not include?
So there's some discussion as to FICA. So FICA is employee and employer FICA. So we've read that both employee and employer FICA is not going to be included. I don't think that's going to be the case because they allowed you to use employee FICA when you applied for the loan. I believe that the same numbers you use to apply for the loan are the same numbers you're going to use to apply for the forgiveness. So I don't think that you're going to be able to use employer FICA, the matching portion of your Social Security and Medicare. But I do think you are going to be able to use your employee. But it is on the SBA websites. They put out a few versions of the rules, and that first version says no employee or employer FICA. So we'll see.
Right. And so ultimately it will be their lender that will give the forgiveness that might, at the given time, give them that direction.
I've heard that the lenders are going to have some communication tomorrow as to the rules for forgiveness. That's what I've heard. So we'll see if that comes out.
Great. So given that that forgiveness is based on my employees, do I need to right away bring my employees back to work if I've received the PPP loans? And especially if I'm essential and I've reduced my staff, or maybe I'm non-essential, not working, do I have to bring them back?
Well, so you have to spend there's an 8-week time frame from the time the money was deposited in your bank account. 8 weeks moving forward is what we're being told right now, that the time frame you have to spend your money. So yeah, you need to get your people back on payroll as soon as possible. Now that doesn't mean, in my mind, that does not mean you have to physically bring them back in your building. I think the idea is you bring them back on payroll, whatever that looks like for your organization. If people can work from home, if they can't, they can't, but they do need to be on payroll.
Great, thank you. So what do I need to do to be sure that, let's see, what do I need to do to be sure it will be certain that my PPP is forgiven?
Well, you've got to spend it on the items that, you know, are in the rules. I don't think I mentioned retirement when I talked about payroll. Retirement is, the employer matching of retirement is included in that also. So you have to make sure that you spend it on the 75-25, 75% payroll, 25% other in your 8-week time frame. Now, again, those rules can change. It's not going to surprise me whatsoever if they change before the 8 weeks is over. So you need to, you know, pay attention and keep asking and keep looking for those changes. But that's what you've got to do to get it forgiven.
Okay, so I have here on my list, but I think we've covered this. Are there things that I cannot include in that calculation?
Yeah, we did talk about it because we talked about the employer employee FICA. So a lot of people, when they made this calculation, I just found one yesterday that the calculation was made using total payroll costs right off of their financial statement. That's not what the rules said. The rules said wages, and total payroll costs and wages are two different things. Mm-hmm. So we're not sure. We're trying to find out right now what that means. So if there's an error on those applications, a clear error, what do they do? I don't know. I've got some calls into a couple of bankers to find out if they've got any direction on that, and I haven't heard.
Okay, great. So record keeping sounds like an important thing, that you have your good reports and are keeping records so that once we know the rules, you'll have the right numbers in front of you.
Well, and another thing, Susan, is to not only keep those payroll reports, which you should have access to, but those payroll reports, but be making the calculation throughout the 8 weeks, mm-hmm. so that you're aware of where you're at.
Great. Well, can you explain the 8 weeks a little bit as you understand it? Like, when does that start? When does it stop? Do you have an idea of what dates on the calendar each person should be looking at?
I believe that it's a straight up 8 weeks. It's 8 weeks from the day you got your money, whatever day of the week that was, 8 weeks moving forward. I haven't heard anything different. I haven't read anything different. They haven't really specified. And that's where I think things are going to change because of different payroll periods. But if it continues to be straight 8 weeks, I would suggest that if people need to run a short payroll, they do it to get it in. They need to think about running short payrolls, and they need to think about running bonuses. If your payroll, your average payroll from last year is not your average payroll this year, then you might want to think about bonuses, or you're going to pay it back.
Right. Can you talk a little bit about the other 25%? So we know 75% has to be spent on payroll. The other 25% you mentioned as rent, mortgage interest, and utilities. Are there any variables there that we should be thinking about?
Angie's going to take this one, and she's got a sign there that says she's muted.
Let's see, do we got her unmuted?
Not yet.
I don't like being muted.
There we go.
Not that I want to interrupt, but I don't like that. Okay, sorry, what was the question again? 25%. 25%. That's right. Okay, so 75% on payroll. That's pretty cut and dry, like Ann just talked. The next 25% should be utilities, mortgage interest. Mind you, that 25% could be a little different for somebody that's self-employed. The interest could be on personal property as well, so vehicles. So just, there are some variances there. But yeah, utilities, so gas, electric, phone. Well, we're going to throw phone in there, but like even Ann said, the bug guy, that comes in sprays. So just utilities.
Great. So what if my payroll expenses don't satisfy the 75%? You did mention paying bonuses. Do you have any other advice on what businesses can do to strategize to get to that 75%? Or what happens if they just don't? Do they
Yeah.
Can they return it? What can they do?
We believe that they can just return it. We have talked to a few financial institutions that say they believe that that's okay. But like Ann was mentioning, if the calculation was incorrect, yeah, try to pay bonuses. And remember, it's the employee count and the payroll level. So they both have to be the same. So, and full-time equivalent. So not all your part-time people, but yeah, just do a calculation in the middle of the 8 weeks, make sure that you're going to make it. If you're not going to make it, then be prepared to pay it back. And one thing to remember is this will still cost you money because like Ann said, you can't include the employer portion of the FICA. So if you're not operating, which I think we'll get into, this may not have been a good loan for you or forgiveness grant.
Okay, great. Yeah, well, we've got one question in the chat. I'll give you that in a little bit. We've got some people out here that may not have applied for the PPP, or they applied but they haven't received it yet. You know what? Before we get to this one, let me grab the question in the chat, which is, if we do not extend all the funds, I expect we'll still qualify for forgiveness on what we did spend, and then we'll be able to pay back the remaining balance plus interest. Do you have a sense of that?
Yes. So from what we have gathered is if you just don't meet the 75% or that you didn't spend it all. So say you got 50,000, but 10,000 of it you just could not spend. We believe that you can just pay it back, or it can turn into a loan for 2 years at 1% interest.
Yeah, for some people it's a low interest loan, and it might actually be a good loan opportunity if you have some things you need.
Could be.
Great. So I didn't apply for the PPP, or I applied and I didn't receive it. I understand there may be tax credits available that I can use. Can you talk at all about what other opportunities there are here on COVID relief?
Yes. So if you did not apply for PPP and you didn't get it, these credits basically aren't available if you got it. The first one that we'll talk about is called the retention credit. It basically deals with giving you a credit for wages that you've paid. There's certain roles for employers with over 100, certain roles for employers with under 100. It's based off of your gross receipts. You have to prove that your gross receipts were 50% less than what they were. There's a time frame. It's basically about 2/3. Well, no, it's different we won't get into the actual calculation, but it could be 50%, a credit of 50% up to your qualified wages. To apply for it though, you will just reduce your payroll tax deposits. So that's still a little bit of a question on, if you have a payroll system, how it's going to work. But the next credit, so the employee retention credit, you cannot take it all if you get PPP, not at all. The next one is the family, we call it FML, family medical leave. This credit you could take before you got your PPP funds. And like we were talking yesterday, we believe that there was a whole timing about this, which maybe Ann can explain because she has a good theory on that. But the FML is if you have an employee who is sick with COVID, was sick with symptoms like COVID and went and got tested, you can pay up to, you pay 80 hours of sick leave to them and you can get that back as a credit. But then there's also, if you have an employee who does not have childcare available, and that could go to 80 hours, but extend out to 10 weeks. And both of those credits are calculated a little bit differently, but there's credits available for that. So yes, there are some things that are available. I will warn you though, that has to be done through your payroll provider. These are not credits that you will take on your tax return. These are credits that you'll take on your payroll tax returns. And they kind of need to be now. So you need to be talking to your payroll provider and that type of.
Having them help you navigate through that.
Exactly.
Great. And did you want to talk about that timing at all?
Pardon?
Would you like to talk at all about the timing? We did talk. I thought that was interesting yesterday, talking a little bit about how, if everything had worked perfectly and programs had gone swiftly, this maybe would have worked pretty well, but it was kind of the time delay that probably complicated things. Is that right?
Yeah, gone over this in my mind because it doesn't make a whole lot of sense to me. So I think that the thought process was with our senators and congressmen that I think they thought that no one was going to get laid off. I think that they thought that they could roll this out fast enough that we could put people on family medical leave for a couple weeks. And by the time they got this PPP rolled out, no one would be laid off. So we would just be retaining them. People would be working from home. People would be, doing what they had to do to protect themselves, but there wouldn't be this big surge on unemployment. Well, as we all know, that never happened. So now we're faced with trying to figure out whether people want to come back on payroll or not. And that's a big problem, which I know you're going to talk about in future sessions, but it's a big problem.
Right. Yep, it is appearing to be. So we talked a little bit before everybody got on the call. We hear that, we know that more money was added to PPP. We've heard of people making applications in the last few days. To the best of your knowledge, is there still time? Can I still apply?
Yep. As far as I know, I looked this morning, it looks like there's still funds available. The last time it ran out, they were pretty quick to say, we're out of money. So yeah, I mean, apply now though, because just like the last one, Ann and I think it's going to go that quickly. So
we talked about that on our Tuesday call, and I would say the same. The big message that I've been trying to encourage businesses: hurry, to apply for anything that might be out there. That said, in balance of your knowledge of your eligibility and of the time you have. So some of us went through, off and on for hours a week or so ago applying for a grant that the U.S. Chamber, generously made available. But it turns out that in looking at the small print, probably most of the people that tried to get that really weren't great candidates for it anyways, and the system crashed. So you do have to balance what kind of time you have and what your eligibility is. And if those seem at all to match, hurry to apply and then wait and carefully consider consulting with your payroll provider, your accountant, those advisors that you have that can help you understand if those monies are used. We've heard some of the big businesses returning the PPP grants, and I'm sure some of that was because of public perception, but some speculation I've heard is there may have been corporate attorneys that looked at the fine print and said, not as good of a deal as we thought. So check out the fine print and make sure that you are a good candidate. So that's kind of my next question. Can you tell me why I might not be a great candidate for the PPP loan, or why I might decide once I've gotten it that I should refuse it and not take it?
Sure, I can give you my opinion.
Great.
So two things, if you're kind of not essential, then it's going to be hard to pay your employees because they're probably on unemployment. We won't really get into that because I know it could be a big debate, but we've had a lot of clients that say, my employees are refusing to go back on payroll. I'm not even going to make them come in. So if you're not essential, you may not want to take this. But also if you have no intentions on paying payroll, you should not have applied. Ann and I talk about this all the time because you certify that, the funds will be used to retain workers and maintain payroll or make mortgage interest payments. So you're certifying that you're going to pay that payroll. So really, I guess that's the main one. If you had no intentions on putting your people back on payroll, this might not have been a good loan for you or program. The other ones, like I said, if you can't open up at all, it might not have been a good plan. But the problem is nobody knew what was going to happen in that 8 weeks. So we, pushed people to even apply because, like restaurants, you might be able to open for 4 weeks. And if you can open for 4 weeks and use it to pay your people and give back what you didn't use, then great. But
yeah, there's some people that will be really good candidates for this, especially essential services that have had to stay open. This will give them some relief. And I didn't throw in here about EIDL, but right now that application is not open. It did get some additional funding, but as near as we can figure, there were probably enough applications in the queue that those are getting first consideration. Let's keep our fingers crossed that at some point here there will be a reopening, because some of those people that aren't great candidates for PPP are really good candidates for EIDL, at least for the advanced grant, and perhaps for even the loan portion of that. Do you want to comment at all on EIDL, Angela or Ann?
I don't.
Well, yeah. So I go back and forth on what I think how EIDL and PPP are going to play. I'm not sure, to be perfectly honest about it. I know the rules say if you got EIDL before April 4th, you had to put that on your PPP application. I don't know anybody that actually got the money or knew. The problem with the EIDL is it just shows up. You don't get an email. Right. It just shows up in your bank account, and unless you're checking it all the time, you may not even know you got it. It's $1,000 per employee, not $10,000 like we all thought it was. So that's all changing. I do think that if you did get EIDL and PPP, I think you ought to make sure that you spend your EIDL money on something other than the money that is allowable for PPP. So right. Spend it on buying product, or spend it on anything other than the items we talked about for PPP.
Yeah, that is my understanding. You need to use some care. It should be on operational costs.
Yeah.
So that is not the time to take that advanced grant or EIDL money and start something new.
Yeah, and there are some stipulations. I did read some stipulations about you can't use it for certain things. I think one of those things was, I don't want to say repairs. What do I want to say, Angie? You couldn't use it for
capital improvements and capital purchases.
Yeah.
Equipment.
Right.
Yeah.
Yeah.
So that was one thing that we did read, that they didn't want you spending it on. Somebody had just asked, I think it popped up on my phone here. Somebody asked about the PPP for Schedule C. Do you guys want to talk about that?
Yeah, I think we should, because she has a very good question.
So that's that is the question. Can you address PPP for sole proprietors? One of the presenters on Tuesday suggested that the new unemployment might be a better option than PPP. We applied for PPP in the first round when it opened for sole proprietors, but are still waiting to hear back.
So I think that the decision on whether you did PPP or unemployment would depend on how much money you have showing on your Schedule C.
Exactly.
So if you filed a Schedule C, first of all, you had to file 19. So if you filed your 19 Schedule C and it had zero profit or very little profit, the math doesn't work out real well for you. So I don't know how the math is going to work out for unemployment for self-employed people, because I don't know those rules. I don't know if they're even out. I don't know how that's being calculated. But if you don't have income on your Schedule C, you're not eligible for PPP. So your only option is unemployment.
Right, and that is open for sole proprietors now.
The unemployment? Yeah.
Yes.
I have not heard any sole proprietor that has received unemployment yet. I would be curious if anybody out there has.
Yeah, but that opened late, and I know that many of the people that applied, my daughter included, for unemployment, 5 weeks ago, before the end of March, just got their PINs, and some haven't even received money yet. So let's be hopefully optimistic. I know it's hard when you're waiting for money to come, but,
right.
But hopefully that will come in.
Yeah.
Wendy, I know you're on the call, and I'm looking, I feel like I saw your email yesterday, but if you don't mind sending your email questions again real quickly, I'll make sure that we get those asked. And I know another question I had, and we don't want to get too in the weeds on this one, but the example of, you kind of alluded to this, someone that received the PPP, not open, have staff that are collecting their unemployment, which I have not heard of anyone yet that are getting that bonus 600 or 540 if their taxes are out. But, it can be a real challenge for some to tell their employees they're going to bring them back to work, particularly if they're not working, if they're just going to bring them on payroll and not to work. And then essentially that amounts to a cut in wages for them. Ann or Angela, do you want to comment on that, or do you want me to kind of share what I shared with you yesterday?
I think you should share what you shared with us, because we both have different opinions on.
Yeah. Well, some of you may have heard the governor say just about a week and a half, 2 weeks ago, that if that's the situation, that you have employees that are essentially refusing to come back to work saying, I want to stay unemployed, you should just pay them more. So Gina, I'll take a head nod on this one, but I would suggest that if you're in that situation and the you can, kind of get those people back to work and give those bonuses and at least get them closer to their unemployment. But you may not want to be that employer that forces your people back, but ultimately you do have the power in this position. So while the governor was saying all you can do is pay more, the fact is that to be eligible for unemployment, you cannot be offered equitable work. So you can go out to the Department of Labor website. We'll put the link up of the form. But I would suggest if you think that you're going to be an employer that's going to have that problem and you want to kind of force your hand there, there's a form that you can fill out with the Department of Labor, and you can let your employee know that you're offering them their job back. You need to get them back on payroll. And if they refuse, that you will be letting the Department of Labor know that they have turned down work and therefore ineligible for unemployment. And then you can go about filling the position with somebody that wants to work. So again, I'm not saying that I would encourage everyone to be that employer, but it may be necessary for you to survive this. So know legally what you can do. I would tell you that it may be the time, I've talked to some people that are working with employment lawyers on this to make sure that they're doing the right thing. So join us on Tuesday when we will have an employment lawyer on the call. We'll have an HR professional, and we can dig a little bit deeper on how you navigate that and do so respectfully to your employees and legally.
Susan.
Yep.
It's Gina. I just want to add in that form, refusal of suitable work, has always existed for unemployment. Yep. So it's not something new with COVID. It's been across the board. So it's not something that if you've ever been on unemployment that you wouldn't expect.
Right. So which kind of begs the point that many people, that probably the majority of the people right now that are collecting unemployment have never collected unemployment before. So they simply don't know. They think they can go, and probably most of the employers have never put their people on unemployment. So it's really new turf. I would say the big question mark here is, could our legislators change that? So right now, the governor told us something that was different than we've all known for a long time, or than some of us have known for a long time. So is it possible that the rules will change? Anything's possible right now. But as it stands, that form and that policy is still out there on the Department of Labor. So again, if you're really in that situation, talk to an employment attorney. So there is another question that was submitted, and that is, what if employees quit or let go prior to? How do you account for the decreased hours? So we've kind of talked about that. So what if you're not going to call them back? What if you have permanently laid them off? Do you know how they actually account for that?
Oh, I think you have to get the hours. So it's based on not the hours, I shouldn't say hours, the number of money. It's the number of employees. So you need to meet that. So same with the wages. So you should get somebody hired. And that's what we were just talking about, paying out bonuses and that type of stuff to make sure you make it. But yeah, and it is full-time equivalent. So if you have part-time people, you need to calculate your full-time equivalent. Going back up to Barb's question real quick though, because she said that Barb, you need to call the bank that you applied with and have them check on the status for you. Because if you applied in the first round and you still haven't heard anything, it could be possible that maybe there's something wrong or incorrect, or maybe they need something. So I would call the bank today and ask them what the status is of your application. Because if you're still waiting,
you could be in the queue, but what we heard from Chris on Tuesday is, as soon as it's going through, you should get an ID number that tells you you're kind of in the queue.
And granted, it does depend on what bank you're going through, but I would try and figure out what the status is on that.
Yeah. Okay. Yeah, I'll remind our listeners of that too, that we have found that while there are some things that are consistent, there are a lot of inconsistencies on how the various banks are handling things. So don't assume when a friend tells you, oh, that's not what happened to me, that the banks have a little bit of ability to have their own custom process. So in the second question from Wendy is the loan forgiveness all or nothing? If you don't have the costs required for forgiveness of the loan, can you get your actual costs forgiven and then keep the loan balance remaining?
Go ahead, Anne.
I think so. That's what we've been told, but there's nothing in print that states that. But I have been told by 2 different banks that yes, that's the case. So if you spent everything but $10,000 appropriately where you needed to spend it, then the only thing that you need to pay back or turn into a loan will be the $10,000. And as long as you would pay that $10,000 back within a certain time frame, weeks or something, I'm not sure what the time frame is, back to the bank, then there's no interest. There's no charge at all. That's what I was told.
Right. I think now is the time to start running your numbers and developing a strategy for that, so that so that if you're trying to avoid the interest of that loan, that you at least are careful. Don't just go spend it all and then try to figure out how to get it forgiven and not have the money to pay back.
Well, that's the key here. I believe. I think that if you applied for this loan with certain intentions and those intentions have changed due to whatever, maybe you can't open, maybe something happened, who knows? There are all kinds of circumstances. Don't spend the money. Pay it back immediately, you know what I mean, to the bank. They're not accepting it right now, but as soon as you can pay it back. Don't spend it on something else, because that's when you're going to get in trouble, by breaking those rules.
Right. So there's one more question. We're going to end with this one because we're at the half an hour mark. But Barbara also asked, you mentioned the 401k contributions in the PPP calculation. As sole proprietors, we don't have a 401k contribution through our business, but we did start an SEP last year. We didn't calculate that in our application. Should we have?
I believe so. I think you probably could have. And that's a good question. I don't know the answer to that question. Angie and I were talking about this yesterday. If I filled out my PPP wrong, let's say I didn't add in the 401k or the SEP, and I could have and I should have, can I change it when I'm calculating forgiveness? I would assume that you can, but that's an assumption. I don't know. That's what I will be looking for immediately when those rules come out. If I made a mistake in my PPP, can I fix it on the application for forgiveness?
Yeah, I think I'd be talking to my lender too and finding out what they say. Yeah.
Chris is gonna probably beat me, but the banks are the ones that are going to be calculating and reviewing all this information for forgiveness. So just keep in mind that, the banks will have that responsibility. You will have the responsibility to prove the numbers, but
but based on Tuesday's call, unfortunately, they haven't really been given, just like everything else in the scenario, they haven't really been given direction on what that forgiveness process is going to look like. So
I read that it should be out next week. Did you see that, Anne?
I heard Friday. I heard tomorrow. Okay. Thursday. I heard Friday. Yeah.
Yeah. Sounds like a lot's happening tomorrow. So I think we're hoping for more direction from the governor tomorrow. Hopefully some of these things will come out. Rest assured, there are people working really, really hard right now to put structure to all of this. In the meantime, it's frustrating. I know. So as wise people have said, we're all in the same storm, not in the same boat, because some people have more resources than others, but I know there are people working really hard. And so I would encourage everyone to be kind to your lender, kind to the SBA, those that are trying to navigate that. Even your legislators, be nice to your legislators. They're trying. Be nice to your accountants. Yeah, they're spending a lot of sleepless nights. And I will tell you, again, I credit Gina with setting a great model for this series. I thank her for the work she's put in and for helping me get started. I can tell you that your chambers are working hard too. We want to make sure you make it through this. So if there's something we're missing here, another session you'd like to see, more information, please reach out to me or to Tessa and let us know what you need to hear. Let me see. I got so caught up that I didn't advance our slides here. We have prepared for you follow-up and information about upcoming sessions. So you can visit our website at venangochamber.org, Shift, Sustain, Succeed, and you'll be able to see those registrations. We have people registering, I think, already for next week's sessions, which will be HR and employment law. And then we'll have Senator Hutchison on Thursday to talk to us about the return to work and kind of where those decisions sit and how we navigate bringing people back on. And of course, any resources that we mentioned during these calls, we'll put links and give you information about those. So thank you so much, Ann and Angela. I know it's a little vulnerable position to put you out there when things are changing a lot and you're navigating this as well, still during tax season. So thank you very much for joining us. Thank you, Tessa, for helping us host the meeting. And I hope that you all join us on Tuesday. So have a great day. The weekend is almost here. So thanks, everyone.
Thank you.
Bye-bye.